Good evening, everybody. This is Harmeet from Sigma Picks. Thank you for tuning in. Just this evening, I think it would be a good time to start to go back and look at our accounts for SPY, QQQ, and IWM and get a broader view of the market again. And if you have been following us or not, the last video was made, we were discussing if this was truly at the 479.98 level was truly the end of the primary wave, the third wave right here. And what I was trying to get at was, we were coming off of this low and we were moving up, and the idea was that we didn't have enough data to make out the fact that if this truly was end of a larger primary wave or not, and we needed to see how this specific area developed. Okay, let me just point that area out for you guys. We wanted to see how this part developed in order to say that, yeah, we are in the end of the third primary wave and a larger correction is on the way. I am very hesitant about saying correction and diligent about pointing out consolidation or distribution. At this point, we can pretty much say we are in distribution phase, and the larger cycle being over, and the fourth wave that you know we don't know exactly what's going to happen for now, but we can say we are in this fourth wave. We did discuss that this did have that five wave structure. We can expect another some sort of three waves corrective structure, and then we are in the midst of this more of a five wave structure down. So what we can say with certainty is that obviously this is over at this point, and with Fed tightening coming and all the things that are happening, the macro environment also kind of supports the idea that the primary third wave is over and we are going to be in correction for a little while. So where do we go from here? So a few areas that I am totally interested in. Obviously, the 442 zone. Let's just start with that. Okay. We are in this 451 area right now. Okay, we go through that. Expect to go down to 442. That's just the next area to watch. Okay, that's a big fib level, and of course, the other possibility is that we do come back and stay in this zone and develop something else, but we don't know that yet. This can be constructed into a five wave. So that criteria has been met where the third here, let me just write this down for you guys. So 1, 2, 3, 4, and 5. And also the third wave is the longest wave. So all of that criteria meets the fact that the five wave structure can be completed at this point. It can see some sort of rally, but that does not mean that it is over. Okay, we have to kind of be diligent about saying and understanding that we don't know that this is the bottom. We won't know if this would be the bottom if we do get there. So this will take a while to develop. I think whenever the next Fed meeting is, I don't want to get ahead of myself, but I do have a feeling that they may go ahead and raise maybe within this coming quarter that we are in right now. By the end of March, I do expect one raise, and the upside saying that we could get upwards of 3 or 4, depending on how Fed is, how the what the data they're receiving and what they will decide. But we can expect at least three rate hikes, and that also again, tells us that we are in a different environment macroeconomically, and so we can pretty much definitively say that the third primary wave is over and we are in a correction. So let's see how this develops in the next few days. We had discussed the fact that expect to move down. I'm not sure if any of you caught the short or not. I mean, I think my audiences are pretty intelligent and they would see that, and most of them did catch that. And hopefully we'll see if we can keep working with this. The idea here is that not to take really large risk. I want it very small, the smallest I can take, kind of survive um, this environment and kind of grind and just get small wins here and there and not try to do, don't load the boat. That's pretty much what it comes down to, and understand that anything can happen. Wix is still, we are still above 20. Probabilities go down of what you can say, how with high probability what may happen or may not happen. Okay, so this is pretty straightforward. We kind of have an idea where it's going, and let's go look at the QQQs. Okay, so there's going to be two different counts we're going to look at for QQQs, and let's just go over the one that we have been following, and we were also discussing that this could be, so this three right here, this is the intermediate wave, three, that this could be the end of the fifth intermediate wave and a larger primary cycle. We know that we were watching and seeing if it would go up or not, but 404, I think the high is 408 here. So 404, 408, so 1% at this point. I think the idea was that if this started going below this level, the 377 level, excuse me, the 368, I apologize, 377 level, okay, this area we were looking at, and it it did go below it. I still didn't want to call that. I we did say that these zones, the 127 and 138, is a big area to watch where we could see a bounce. We did get a bounce, and we made a transient high, and now we're breaking down below that. So this is pretty stereotypical ABC correction, and that's what we're seeing. And the idea was that we were still in this intermediate fourth wave, but we also didn't want to say that the fifth wave had ended. So that was one idea, and the other count that I wanted to look at was where we can say that this was the end of the larger cycle. This was the end of the intermediate third. This was the end of the intermediate fifth, and this was the end of the primary fifth wave, completing a cycle. Okay, that was, I think, with what is happening again, like I mentioned when we were looking at SPY chart, the macroeconomic environment, and what is going on with Fed, and we're seeing massive distribution patterns, not consolidation pattern anymore. This is a distribution. There's a difference. So consolidations tend to be more flatter. They don't tend to be as deep, okay, where distributions tend to be momentous and deep. And so we are in a distribution, and also the fact that we can say the fifth primary wave was attenuated, never got to the 408 level, 404, so 1%. I think that's pretty fair. So we're gonna watch and see how this develops. This has that five-wave structure, and this has the four-wave structure, and this also has, this is going through that five-wave structure to give it this, A, B, and C, but we don't know exactly if that was going to be the case, if it goes through or does it go sideways. It has to form some sort of a bottom to say exactly what kind of correction we're in, but that at that point it kind of becomes purely academical thing for a lot of us Elliot Wave people to follow and kind of see what's going on. But for any day, everyday person, the one thing that you do want to see, if things start to improve, that it will start taking out highs and start making so we'll take out a high, make a higher low, higher high, start forming a trend, then of course come back down and then support and just kind of start making this base area. Okay, and that's pretty much what everybody should be concentrating at. This is what I will be concentrating at. I will be following this Elliott wave count. We'll keep a track of the previous one also. We'll keep track of this, see how this develops. We do know that if it starts going below 50% here, the 362 level, we get to the 61%. At that point, the case becomes even more so that the larger fifth primary wave or the cycle is done, and we are in expecting a longer duration of this distribution to continue, and hopefully with the distribution we'll eventually get into the consolidation phase and so forth, and we can see another hopefully we'll see a move back up, but there's a lot to come. So let's just wait and see what the data represents and presents us with in the next month or so, and we'll keep following this and see where we get to. But for now, again, nothing much to do but to be very conservative in my trading. Again, the volatility is high. Be conservative. Be quick to take profits. Be quick to cut out losses. Expect a lot more stop outs and so forth. So let's see what happens. It's never a dull moment. Okay, the next chart we want to look at is the IWM, and boy, we talked about how it had this momentum move to get out of this diverse consolidation and failed. Okay, and created this gap. Okay, I'm pointing that out, this gap. Okay, let me just, so it created this gap right here, and the idea was if it was to move, it had to get through this gap first. This was again became a very important gap. It's not the fact that we don't see gaps a lot, but the fact that it could not even break into the gap. Okay, and that kind of set up, we were thinking that this is a possibility that it will break down through the Darvas box. So what do we do from here? This is a really, really interesting thing. If again, I'm expecting it expect it to go down to about 190, but of course it has to get through this 200 level first. I think that's going to be a big support zone, but if it does come back and retest this 207 area, okay, and fails, this would be a great position to start looking at that short and thinking that let's redraw. What that would indicate is that we have had Now this is the C wave we're talking about specifically. 1, 2, some sort of third, okay, which we're still in, and fourth wave, and then we can expect a flush, a high momentum move to continue and down. So that's where I will be looking for putting on a short. It would be a fairly innocuous short because I know if it starts going back into this Darvas box, we are gonna have the same scenario as we did in this the intermediate fifth wave that had ended, and or the larger primary cycle has ended. So, but that being what it is, it's extremely bearish right now. The fact that it did break down through this area that we've been in for almost a year now, and we try to get out and we did not. So be vigilant. IWM is going to be something that will, as much as IWM, had this momentum, the intermediate third wave come, and that's where we saw all of those AMC. We saw all these other GameStop, all these other small caps that really squeezed and then went sideways, and now that consolidation is now into a distribution phase. So a lot going on, a lot to digest. There is no hurry right now to get into a trade. If you did get short, awesome. Great work. And we'll see how this develops. Okay, thank you for tuning in, and I really appreciate you guys taking the time out and subscribing, and it really does go a long way, and we will talk soon. Thank you so much. Have a great day. Bye-bye.